Hello, this is the instructional video for the bakery break-even analysis template. And I'm going to walk you through how to use this template so that you can understand your numbers and you can have a profitable bakery business. So I used this break-even analysis in my own bakery. And I used it when I was determining if I want to expand my business or not. I wanted to look at my current break even. Also ran the same numbers for my projected with the expansion and used that to kind of figure out if that was something I wanted to do. So the way this works is you can see down here, you have all of these tabs that are going to help you calculate these costs. Most of these cells you're not going to be able to make an edit. If you try, it's going to say, like for instance, try to make that 5. It's going to pull up a window here that says you're trying to edit part of this sheet that shouldn't be changed accidentally. So you shouldn't be able to edit anything you don't want to, or that you shouldn't, that will break the spreadsheet. These boxes that are in blue are the ones that you're going to edit. So rent, you should know what your monthly rent number is. So for this example, we're just going to say it's $2,000. And so then that shows you that that's $24,000 a year. It's $461.54 weekly, and it's $65 daily. Just to cover your rent, if your rent is $2,000 a month. The other one that you're going to fill in right away is how much take-home pay that you need as the owner to pay your bills, whatever you need to make a month to make this bakery work. So we're just going to put $4,000 a month there to cover your bills. And so far your overhead is $6,000. Then we're going to move over to these tabs because all of these other fields are going to be filled in with these tabs. So we're going to go to loans and debt. Maybe you have a small business loan. I know I do. And so pay a month, let's say you pay $1,700 a month for your small business loan. And then maybe you have other debts that you want to plug in there. Maybe you don't. We're just going to leave it there for now. So you can see the total monthly payment is $1,700. Goes over here. That plugs right in on the spreadsheet. Now the monthly overhead is looking like $7,700. So now we're going to go into utilities. So utilities, I broke it down on this sheet so that it will come up with a monthly average. The utilities that I pay here in my business are vary month to month. I know some places maybe you have a one where it averages it out for you, but we're just, for the sake of this example, we're going to just do a variable price from month to month. I literally, when I fill this out, go into my bank statement and literally put the exact numbers that I paid, but we're just going to plug some stuff in here. And so for all of the utilities, so we'll pretend electricity and gas cost the same. And we'll just pretend these all cost the same just for the ease of this exercise. So we've got our variable bills, which are paid monthly. If you have any fixed bills that are paid monthly instead of being variable, like phone, I pay the same thing every month. You just plug that in this section. Internet, pest control, because you're a bakery and you don't want pests. If you have other things to add, you can do those here. Say you have 3 other bills that you know about. It's important that you insert a row above, or you could do below as well, but you don't want to insert a row right here, because if you insert this row above, let's say it's $20, see how it updated this number? If you insert the row here and put in 200, it doesn't do anything with this because the formula only covers those. So the main piece of advice on this is for any extra rows you want to add, always add them above one of the last rows in the formula. And then the bottom one is bills paid yearly. So anything that you pay yearly rather than monthly. I put garbage here even though I pay garbage monthly, but I wanted to have something here. So you can put any items you have there. If you don't have anything, just leave them blank or leave it 0. And then again, that comes over here and shows under utilities. And then we move over to the software. And this is things like I use Shopify, I use Canva, I have Google Workspace for our emails, we have an email marketing platform, Klaviyo, we pay for Spotify for the bakery, we have a scheduling app. All these things are going to be entered here. Again, if you have any where the bill varies monthly, you can use this top section. If you don't, just leave it blank. The fixed bills is probably where the most of those are going to be for monthly. So again, just plug those in. And again, you should be looking at your bank statements to get the real numbers, but I'm just plugging a few things in for the sake of this example. And then anything you pay yearly goes in the bottom section. So, and again, that figures out your total and your monthly total, and it plugs it into the monthly analysis. Then we have advertising expenses. We pay for the Knot and Wedding Pro. We have a subscription for that. We also pay for like Facebook and Google. I would put those on here to average those out. We also do markets and pop-ups. So the fees we pay for those. So say we do a couple $100 a month for printing. We had 0 in March. We had $300 in April. Big project in August. And we'll get the averages there. Market booth fees. We have a couple of those in there. And it just averages it out over the year. I don't know what the Knot we pay for the Knot, but plug that in. And then if you have any yearly advertising expenses, those again would go down here. Keep moving on. We have professional fees. And anything you have here, like I pay for a bookkeeper and an accountant. She cost me about $1,000 a month between all my businesses. Amazon Prime membership, any networking groups that you're a member of or were a member of the Chamber of Commerce. Any other things that you pay yearly, like a Costco membership, a Sam's Club membership, things like that. Plug those in. Then we get over to payroll. This, if you have any salaried employees versus hourly employees, we have those broken out. Also, what your payroll tax percentage is. Mine usually ends up being about 9%, but this way you can factor in the payroll taxes as well in addition to the hourly rate. But we'll say we have one employee who makes $20 an hour and they work 40 hours a week. We'll say we have another person who makes 18 that works 40, and we'll say we have somebody who makes 16 who works 30. And no salaried employees. And then finally, we have variable costs over here. This is your cost of goods, your supplies and equipment, repairs and maintenance, and then any other incidentals. This is obviously the least accurate one and where you're going to run into a little bit of a guessing game. For me, when I did it, I literally just took my profit and loss statement and plugged in the numbers for each of these items for the last 12 months. And used the average, and that's what we're going to work off of for the break-even analysis. It's not going to be exact because it might, year over year, those numbers might be changing a little bit, but this is kind of the best information we have to work with. My cost of goods ends up being about 22 to 24%, and it did work out that with the projections and with this break-even analysis, it still worked out to that same percentage. So it was fairly good, but we'll just plug in some numbers here so that we can get the averages. And I guess we had a low August based on my random numbers that I'm typing in. Oops. And then packaging, we'll do another. And then supplies and equipment, let's say we spend $5,000 in the last 12 months. Repairs and maintenance, we had $3,500, we'll say. Incidentals, kind of anything else that doesn't fit into these. Mileage, travel, meals, continuing education, legal, just anything you want to account for that comes up with it in a year. And then again, if you want to add any rows or add any other things, that goes there. So then if you come back to this first page, we have our full break-even analysis. The total overhead on a monthly basis is $9,817. Payroll works out to $9,400. The variable cost works out to $2,200 a month. And so the total break even for this fake imaginary business with wild numbers that I just typed in ends up being $21,464.90 a month is what this business would have to make in order to break even. That's $5,000 weeks and $700 days. For the year, you'd have to make a little over $250,000 for this business to break even. And that's it. This is how to use the spreadsheet. Like I said, don't really mess around with anything on this page other than these two first blue boxes. Everything else plugs in for you. And these tabs down here are the ones where you're going to want to put your numbers in. Put your numbers in any of the blue ones. And yeah, hopefully this helps you in your business. Again, I am not a financial advisor. I'm not an accountant. I'm not a bookkeeper. This is just something that works in my business. So it should be taken at face value and just used as a tool in helping you make decisions about your business. And as always, work with the professionals, the legal and financial professionals who can help you verify these numbers or make them make sense for you. But this is what I use in my business, and I like it and feel like it works really well, and I hope it works for you too. Have a great day.